Hi everybody, it's AJ speaking. Today is August 1st. BYD just released July numbers. And the reason why I do this ad hoc video is because what we see in this disclosure is quite significant. So first of all, in front of you, you see the disclosure. And you can see that for July, total numbers came in at just 344,300 units. That's a lot. But the important thing is that when you compare to the prior year, July 2024, that was at 342,400 units. So that's only a very small year-on-year increase. Additionally, you can see that BYD cut back production year-on-year. So they made just under 318,000 vehicles in July this year, but last year they made just under 321,000 vehicles. This doesn't appear like it's much, but the point here is the entire BYD investment thesis is built on BYD becoming this giant leading global automaker, and because BYD is super low profitability, its giant valuation is all driven on this super high growth. But as we see in a moment, what these numbers imply, this growth has now stopped quite abruptly. So the many rumors that we saw in the market over the last couple of months about the Chinese regulator expressing quite a lot of, let's call it, displeasure with BYD appears to be true. Apparently, BYD must have been forced to change something in their business practices. Otherwise, you cannot explain such an abrupt halt in this very fast year-on-year growth rate, since the rest of the market appears to be doing fine and there were no other major market events. So it's unreasonable to assume that just all of a sudden the growth trend totally stopped. Let's first look at the share price. Of course, somebody always knows something. So yesterday BYD was down almost 4.6%. And down here you see the market cap. So BYD is at $134 billion. That's quite a lot for a very low margin business that is geographically highly limited to Asia, since at the present Europe is largely tariffed off, and so is United States. So let's look at this more meaningful sales breakdown. So this goes back more than 3 years on a monthly basis, and the number I want you to pay attention to is this percent number that is underlined. This always shows you for each month the year-on-year, and the key observation is, number one, these are enormous, huge year-on-year growth rates, which are completely unprecedented for this long at that level in the automotive industry. And this earned BYD enormous global respect across the entire automotive landscape. And when you look closely, there's a single month where there was a year-on-year decline, and this was driven by a year-on-year Lunar New Year effect. I discussed this before, so I will not dive into this effect here, but the point is, the now reported just 1% year-on-year growth is something completely unprecedented in several years outside of one-off seasonal factors. I follow the industry quite closely, and I can tell you there is no such factor applicable in July. The next interesting number is the month-on-month 10% decrease. You can see how in June the company sold 383,000, and in May 382,000, and in April 380,000. So very consistent, even though the month of April is not, from a seasonal perspective, not the greatest month, but still very high consistency. And even if you include March at 377,000, so these are 4 highly consistent month, and you can see this by the month-on-month change, just 1% increase, 1% increase, and then flat, and then boom, 10% drop in July. When you compare this with prior periods, this was always driven by seasonal factors, in particular the effects of cold winter and then of course the effects of Lunar New Year. And just keep in mind, Lunar New Year does move year on year. From sometimes it's in January, sometimes in February. And this creates, depending on how it falls, some interesting statistical effects. So once you adjust for all of that, you can see that July is a completely unprecedented sales trend in several years. And that's why I wanted to make this video, to draw your attention to this aspect, because BYD is a key player in the global auto industry. the Chinese market is at the moment the most important market globally in automotive, not only because of its large volume size, i.e. how many units are being sold there, but also in terms of setting new technological standards, in particular in electric vehicles, including fully electric vehicles and hybrid electric vehicles. We have reached a level where European and American automakers like Ford and General Motors look to Chinese auto companies for insights on electrical architecture, etc. Just the other day, a Xiaomi was spotted in Italy at Ferrari, where apparently Ferrari does some benchmarking. Several months ago, I already warned investors that BYD's growth rate will come down. There were several indicators. Number one, BYD's capital base was eroding significantly. This triggered then later a record high capital raise. BYD's off-balance sheet financing in the form of supplier financing reached record highs and was unsustainable because BYD was literally draining all the suppliers of capital. So long story short, so the Chinese market that has been operating in a very unsustainable manner may now enter a new stage. What that stage will look like, we have to wait and see, because this will significantly depend on what the regulator will do next. Ultimately, as always, in China, it's all about creating maximum employment opportunities and keeping Chinese people happy. So my expectation is that we will not see an abrupt, brutal change. I mean, these BYD numbers are quite brutal, but this is just based relative to BYD's development, which was quite extraordinary. So bottom line is, Chinese market is quite exciting right now. And before I let you go, let me leave you with a quote from a Chinese car company CEO and founder. 2025 will be a termination round. He called it elimination round. With that, I hope that was useful. Thanks for listening. See you in the next one. Bye.